Dear students, at the time of retirement or death of a partner, certain adjustments and calculations become necessary. We have seen how to calculate new profit sharing ratio, gain ratio, and also the treatment of goodwill when a partner is getting retired. Along with this, we also should calculate the increase or decrease in assets and liabilities by preparing revaluation account. After that, we should see the distribution of reserves or undistributed profit or loss. Then we have to settle their capital accounts, and finally we should prepare balance sheet of remaining partners. So today in this session, let us see the fourth aspect of retirement or death of a partner, that is revaluation of assets and liabilities. Revaluation of assets and liabilities. Revaluation of assets and liabilities. See, it is similar to the previous lesson, that is in admission we have prepared revaluation of assets and or revaluation account by seeing increase or decrease in assets and liabilities. Here also, for example, this is the firm, here A, B and C, three partners are there. This point of time C retires, and from here onwards A and B will continue the business will not stop. A, B, C were there, C retires, here he retires. Generally at the end of the year he retires, and afterwards A and B will continue the business. Till year we have to adjust and also should prepare capital accounts, and from year onwards we will have new partnership deed, new agreement. Terms and conditions also may change after his retirement or death. Here the firm, that means all partners, they have to settle the amount due to this retiring partner. So at that time certain adjustments become compulsory. For example, assets, building will be there, building. In the beginning of the accounting period, the value of the building is 8 lakhs. Just imagine 8 lakhs. When he retires, when they calculate as per the market value, you should know for all assets there are book value and also market value. Book value means the beginning, what is there in the previous balance sheet, and market value means we have to value as per the current conditions. So generally buildings means there will be increase, so it may become 10 lakhs. So here 8 lakhs, here it is 10 lakh. That means increase of 2 lakh rupees. So from here onwards we need to write 10 lakh in the balance sheet. Then what about that difference? That is appreciation. So we know as per assets there will be increase, that is appreciation, or there will be decrease, that is depreciation. We have to calculate that, and if they get any profit or sometimes they may get a loss also, that should be distributed to old partners in old ratio. For that reason we are preparing revaluation account. I will show revaluation account again. So it will be a revision of the last lesson. Revaluation account means what? An account which is maintained to enter increase or decrease in assets and liabilities or unrecorded assets and liabilities, and assessing net gain or net loss due to increase or decrease in the assets and liabilities. So for that we should prepare revaluation account. Again I will show how to prepare revaluation account. Just to see here, revaluation account. So it is similar to admission, right, amount column. So here also, right here, revaluation account, credit, debit. So here also, you know all those things. Right here, particulars, amount. You should write amount in rupees. Here also particulars and amount in rupees. Now this account, as you know, same thing, there is no change. After the balance sheet, they may give adjustments. Just go through the adjustments. There sometimes what they do, in percentage wise they give. Sometimes they give increase or decrease the amount. So we should see whether either percentage or increase or decrease, and sometimes they give unrecorded assets and liabilities. You know journal entry, when asset increases, asset account debtor. Here we are adjusting with revaluation account. So connect to revaluation account, asset account debtor to revaluation account. When asset increases, asset account will be debited. Asset account debtor to revaluation account. If you remember one entry, then other entries will become easy, because when asset decreases, asset account will come to the credit side. Revaluation account debtor to asset account. Like that only, liability decreases, the reverse of that. Liability decreases, liability account debtor to revaluation account. Revaluation account is credited by liability account. Like that only, when liability increases, revaluation account debtor to liability account. So we write like this, when asset increases, it will come to the credit side. Remember, whenever asset increases in the form, we should write in the credit side, and liability decreases, asset increases and liability decreases will come in the credit side. Like that only, asset decreases, liability increases. That means asset increases, liability decreases in the credit side. Now we see in the form, value of asset increases, asset account debtor to revaluation account. Revaluation account is credited by asset account. So you should write specifically the name of the asset. Increase in asset, increase. So write the value here, amount here. If 4 or 5 assets increase, separately you should write the name of the asset which increase. Like that only, liability increases, revaluation account debtor to liability account, because it is a loss, to liability account. That also you should write separately, increase in liability. Now next, decrease in assets, reverse of this. That is, asset will come to the credit side. Asset decreases, the amount of asset decreases, revaluation account debtor to asset account. That is decrease in the value of asset. So amount you should write. Now the next one is decrease in liability. Liability decreases means income. So it will come this side, by liability account. So decrease in liability. Next, there may be chances of unrecorded assets and unrecorded liabilities. Unrecorded assets means it is increase in the asset. So you should write here, by unrecorded asset account. Write the amount here. And sometimes there may be unrecorded liability to unrecorded liability. Right in the debit side. Then you have to close the account. while closing also take sufficient place to share the net gain or net loss. Now next comes how to transfer this profit or loss. Remember, this side is income for the firm, this side is more than this side, so balance will come this side. This is profit to partners capital account, to partners capital account. So all partners we should transfer in old ratio. So retiring means there is a little difference between admission and retirement. Admission only old partners will be there. Here old partners will be there. There one partner will be joining. Here one partner will be leaving. So in this case, leaving or retiring partner or deceased partner also will come. So you should write here, for example, X, Y, Z are there. You write there capitals, transfer to their capitals, and better you write the total first. Then you transfer in old ratio. First you write the total, then transfer to all the partners in their old ratio, in the old ratio. Next comes preparation of partners capital account, just like the previous lesson, partners capital account. I will show how to prepare partners capital account while retirement or death. So here there is a difference. In admission they bring cash, here we are paying cash, or the firm is paying cash after settling everything. How to settle all those I will show by preparing partners capital account. So like this, here you write debit, credit, then you write all partners capital account, all partners capital account, all partners capital accounts. Then here you should write the details. Here you write particulars, then these columns, name of the partner, for example X, Y and Z. Particulars X, Y and Z, and in bracket you write it is amount column rupees. Here also rupees and rupees. So like this. So this is the format. Then as usual, first you should see the capital, what is there in the old balance sheet. If there is credit balance, so you should write, generally it will be credit balance only, by balance brought down. So write the amount in all columns, including three partners also old partners, whereas in admission we are not writing is capital or the new partners capital we are not writing, but here all partners capital you should write. Next comes as usual revaluation loss or revaluation profit. If it is profit from debit side, it comes to the credit side, write revaluation account. It is a transfer account, that is profit transferred from revaluation account. There if profit comes, we write revaluation account added to all partners capital account. All partners capital account is credited by revaluation account. Write their share which is shared in the old ratio, their old ratio. Next comes reserve fund. It will be there in the balance sheet, that is also belong to all the partners. When a partner retires, we should see all those what they made earlier, they collected earlier, or their contribution earlier, it should be settled. Now reserve fund also related to all partners, so either death or retirement, it should be settled. So we write general reserve or reserve fund. So it will come in the name either reserve fund or reserves or reserve fund. reserve fund, right? Share it in the old ratio. Sometimes there may be profit and loss account, that is undistributed profit or loss. If it is appearing in the balance sheet liability side, that we considered as profit. If it is there in the asset side, that is loss. If there is profit, that also we will share. Profit and loss account, undistributed profit, if any, undistributed profit. Next comes treatment of goodwill. In admission, you have seen they bring cash accounted to new partner's capital account. Here it is not bringing, he is going out. So when he goes out, or one partner goes out or dies, his share of goodwill should be calculated. His share of goodwill should be calculated and it should be given to him. So here there are different ways of treating goodwill. I told in the previous session. Now we consider when they treat goodwill without opening goodwill account, by taking the retiring partner's share. So for that, what we did do, we have passed only one journal entry, that is remaining partners capital account entered to retiring partners capital account. So here retiring partners capital account is credited by remaining partners capital account. So we write remaining partners capital account. Remaining partners capital account. In problems, while solving, we should write separately names by X account, by Y's account. By X account or Y's account you should write. Then you should share it in gain ratio, and that share will come if Z retires. For him, both should contribute. Both should contribute in their gain ratio. As it is double entry, so it becomes remaining partners capital account entered to retiring partners capital account. Here retiring partners capital account is credited by remaining partner. So we should enter this side also, that is remaining partners capital account entered to retiring partners capital account. Retiring partners capital account, partners apostrophe S capital account. So they have to contribute in gain ratio. If X and Y contribute, right in their place in gain ratio. Sometimes they may ask full value, but as per the AS 26, the new provisions, without opening goodwill means we will write like this, and after that short note you write goodwill. To understand, write goodwill. Here also goodwill compensated. That's all. Then there are no other entries will come in this. So we have to close this account. Just close. Then settlement comes. Before settlement, we should total it. Just total it. Total both the sides. Here also. Total it. Now the thing is different from admission of a partner. Here is balance. Retiring partner's balance should be settled. Before remaining partner's balance settlement or carrying forward to balance sheet. First we settle his account. So take place, sufficient place, and write here. Here comes payment of retiring partner's share. How to pay? There are conditions. Payment or settlement due to the retiring partners or legal representatives of deceased partner. If we are paying by check or cash, we write like this. Direct one installment we pay lump sum amount to cash account or bank account. You settle that full amount. That is also possible. There are different possibilities of paying, because here as per due notice he will get retired. They may get the consent of retiring partner, and they may assure that they may give in future. If they agree to give in future, so there should be loan account. Loan account, in the place of cash or bank, we should write loan account. So loan account we should write. That is retiring partners loan account. Retiring partners loan account. We have transferred this amount to retiring partners loan account. Sometimes what they do like this: 50% loan, 50% cash. So in that case, write 50% retiring partners loan account and remaining to cash or bank account. To cash or bank account, that amount will come here. So next, you should see when there is cash account, that much amount decreases from your cash balance or bank balance. Certain cases they mention paid through check. When check payment is there, cash will not come, bank only should write. So there are different payment methods. They may give full cash, or they may give in future by opening loan account full amount, or 50%, or any percentage wise they may give cash, or they may give in future. Sometimes they may also follow installment method, installment with the interest. If the balance is 60,000 rupees, they may ask the retiring partner that we are going to pay you in future in equal installments with the interest. At that time, interest calculation is there. Interest calculation plus interest plus the installment together we will give to him. So there may be little more money we have to pay when we are paying in installments. So likewise, we should settle. Then comes the remaining partners, that as usual you write to balance carry down. This amount will appear in the balance sheet, and you should not forget to write here by balance brought down. This amount will appear in the new balance sheet. In admission, new balance sheet you used to write all partners including new partner also. There, if new partner brings cash as capital, that amount will be appearing here, and same thing will appear as capital in the balance sheet. So there three partners. Here retiring partners account will not appear. It will not be containing as a partner, but there is a possibility of containing as a loan account. This loan account will be there in the balance sheet till we settle the loan. That you should remember. So don't forget to write retiring partners loan account in balance sheet. In new balance sheet you should write retiring partners loan account after writing the capitals of remaining partners. And cash or bank account, this also you should remember that if they ask to prepare cash or bank account, of course it may come. If they don't ask to prepare bank account or cash account, you may forget this amount. What I have to do? This much account will be decreased from your cash or bank account. So in a bracket in the balance sheet you should write cash, what is there in the balance sheet, minus this amount. So the deducted figure, so that after a deduction the new figure you should write in the balance sheet. So that is there. And one more thing you should remember, after the retirement, these people containing partners or remaining partner, they may agree to adjustment of capitals. That is the last thing. Adjustment of containing partners capital account. Adjustment of containing partners capital account. That means here their balance come. For example, just to see here, his balance is 60,000. His balance is 40,000. This is the balance. Now they may decide that in future they are going to become equal partners. If you total it, it becomes 1 lakh. Then it becomes, for him it becomes 50,000 rupees. For him it becomes 50,000 rupees. Then you see here, This partner will get 10% excess, this partner will get 10,000 deficit. This deficit amount you should write here because he brings cash, their cash account will be debited, here cash account will be credited for surplus payment. So here you should write 10,000 rupees to bank, here you should write 10,000 rupees by bank. That adjustment is also there. I will show one problem with adjustment and one problem without adjustments. So it is similar, very easy also and interesting also. If it is not interesting, you should take interest. If you take interest, you don't understand how you learn all these things. More than that, to become sharp. Anyway, in future you are going to become auditors or accountants. There you should be conscious and also decisive or sharp. All these adjustments will make you very sharp. After this, we prepare balance sheet, transfer all the items which are there in the old balance sheet with the adjustment. With the adjustment, you should not forget to write the adjustments, that is increase or decrease in the value of assets and liabilities. Along with this, you should write the new balance sheet. Then you should see cash or bank adjustments. Cash or bank adjustments. There your balance sheet should tally. So remember, at the time of retirement, all these adjustments, new profit sharing ratio and gain ratio will come. You should remember that. Along with that, while settlement of accounts, you should remember these 5 things. What are those? First one, revaluation of assets and liabilities. Second one is distribution of reserves or undistributed profit and loss. Third one is treatment of goodwill. Fourth one is settlement of amount due to retiring partners' share or legal representatives of deceased partner. And fifth one is adjustment of continuing partners' capitals. Continuing partners' capital account. Don't forget this. These 5 adjustments you should do. And you should show this one in accounts. First you should prepare revaluation account. Under revaluation account, only revaluation of assets and liabilities will come. In partners capital account, you have to do the second one, that is distribution of reserve fund or undistributed profit or loss. Treatment of goodwill also will come under this. Settlement of the retiring partners balance also will come in this. Even adjustment of capital also will come in this. So first item will come in the revaluation account, remaining 4 will come under partners capital account. Through these 2 accounts we will generate balance sheet, and our balance sheet should tally. If you do 1 or 2 problems, it will be very easy. In my next session I will solve 1 or 2 problems, and if you are interested, by seeing this format and based on your previous lessons knowledge, try to solve problems. Thank you for listening.